Hey guys, how's everybody doing? So today is June 6th, July 16th, 2022. Let me put this down. Alright, so yeah, my name is Brandon DeSacchio, and I want to provide you guys with a little bit of a market update. But beforehand, I want to show you guys a post that I just made on LinkedIn. So if you guys can, please follow me on LinkedIn. I'm going to do this weekly, semi-weekly. And yeah, because we're in troubling times with the markets. But good morning. High inflation is a tricky topic within Canadian economic history. The Consumer Price Index, CPI, first introduced in 1992, fails to provide any insight into investor sentiment, mainly how we deal with these uncertain high inflationary events. As a result, we must borrow data from the United States inflation rate. Today we are dealing with inflation not seen since the late 1940s. Early 1950s, and late 1970s, early 1980s. This means that all investors younger than 40 have not yet operated in a high inflation environment. History does not repeat, however, it often rhymes, which leads to the late 1970s, early 1980s high inflation American economy. An energy crisis was similar to one we are currently facing. The aggressive stop in oil production caused the 1979 oil crisis. Today, we face an energy crisis due to COVID-19 pandemic, which forced a rapid drop in energy demand. To deal with this sudden drop in demand, monetary policy kicked in full steam. It is essential to take note of the monetary policy response to the 1980s inflation crisis. The arrival of Paul Volcker as chairman of the Federal Reserve in 1979 commenced what he later deemed adequate price stability. Furthermore, once inflation stabilized after 4 years of contraction in monetary policy, which I don't think is going to happen this time, it'll be far less time, maybe 18 to 20 months. The United States experienced two of the longest economic expansions in history. So after inflation came back down, so in these periods down here, right, we had a bull market. And not even a bull market, in a period of just expansion economic output, which is huge. That's what we want as investors, long-term investors, investors that want to match their one-to-one that they get from their employer. Investors that are just looking at the long term, want to buy a house in a future date. You're under 30, you want to buy your second property, whatever it may be. You want to start a family, you want to better their lives, whatever it may be. That is the active investor. Everybody above that, obviously they're worried about being more conservative. Their days are limited, so to speak. So their economic energy needs to be limited so that they can survive those years of retirement. Today we are in a period similar to when Volcker first took on the task of stabilizing inflation. It is highly likely that in the next upcoming months we will see an inflation peak. Chairman Jerome Powell understands the importance of decreasing demand to achieve a stable inflation rate. There will be a period when inflation does start to come back down, and when it does, oversold assets will begin their path towards higher prices due to the change in investor sentiment, similar to the one seen in the mid-1980s after inflation levels came back down. So this period that I'm talking about. Right now we're here, we might have a local peak and then come back down and then back up because we failed to keep it down. But as of right now, we're just doing that initial leg. Now let me go look at some charts. So this is Bitcoin right here at the bottom of the screen. Let me make this lower. Let me clean this up. And this is just my longs. I can turn this off for now just so we can see it better. This is just showing like how much longs are in the market. But as you guys can see, in the long term, we have these periods of like bull market, bear market, bull market, bear market, bull market. Now we're in a bear market. Now this is the weekly right here. So we can definitely note that we're in this period of like we're finding a bottom between the 200 and the 300 week. I don't know if this is the bottom. It could be lower. I see the exact worst case scenario at around 15, maybe 13,500. But as of right now, we're looking good. Now, in Ethereum, on the other hand, against Bitcoin, we have this little drop right here, and we actually got to this 0.236 level. Yeah, which is 0.05 relative to BTC. And we broke down on this. I mean, this could go lower. I don't think it'd go that low, but like maybe it's this moving average over here, the 200 week. But the important thing here is that ETH is actually doing pretty well. Now, this is the ETH logarithmic on the monthly. And as you can see, whenever in this green band, it's relatively a good buy, right? Like you want to buy here. Now, when we're in the purple band, that's an ultimate good buy. Right now, those prices are being $714 to $470, but we could see some limited risk potential if we do get down there and you do actually execute those buys. But anyways, that's what I'm looking at for ETH. And I just wanted to give you an inflation update, but thank you for watching, and I will give you more as usual. And have a great day. Enjoy your weekend. Remember, bear markets are for going outside. Make sure you get your ass out of the chair and go for a walk. You know, winters will come back. September will come back. Fall will come back. We'll see how the markets are playing out later on. But anyways, take care. Love you all.